Damien Cooley, Auctioneer to the Stars, and everybody else for that matter. And Lewis Christopher, mate, you got the best data around town, as far as I'm concerned.
Thank you.
Yeah, by the way, some would probably argue with you, or me.
Of course I would.
But that doesn't matter. You're here. And thanks very much for coming in. It's a tricky time of year. It's we're sort of around the spring period. You know, traditionally a pretty good time to sell property, perhaps a good time to buy property. I don't know. But I want to talk to you about a whole heap of things around Australian property prices, demand, supply, the Great Australian Dream. We might even touch on what happened at the block on the weekend. Damien was there. Well, maybe let's start there first. Yeah, that's not a bad place to start. Because what I find interesting with that is that you were the auctioneer in one of the auctions down there.
Yep.
And these auctions were in a place called Daylesford, which is sort of like equivalent to the Southern Highlands in New South Wales, and probably the Tablelands in Queensland, and probably other places in Adelaide, and Victoria, in South Australia, and West Australia, and Northern Territory, a place I don't know. But you know, it's a popular place. People like to live there. Some people like to have a Airbnb there, or they might want an investment property there, or they just might have a retirement property there. And all the houses that were built by the block contestants were up for auction on the weekend.
Yep.
And you were an auctioneer on one of those particular properties, which I think was the winner.
Yes.
But what amazes me is the prices.
Yes. Yeah, they were big prices.
Big prices, like
big prices for Daylesford.
Yeah.
But also remember in Victoria over the weekend, it was a huge auction weekend. I think there was like 1,500 or so auctions that were properties that went to auction in Victoria.
Well, is that something you expect to see at any one time of the year, or that's something? Was that an anomaly? What is that?
It's spring selling season,
right?
And yes, there are a lot of properties that are going to auction now. You'd expect that this time of year.
Is that before the Melbourne Cup, though?
Yeah. So we got the weekend before the Melbourne Cup.
That's
see this huge boom in volume, because the following weekend you see nothing because of the Melbourne Cup
and Derby Day, which is this coming Saturday. So it's sort of like the last moment. It's the cutoff. I've got to get my place out of it. We've got to get the thing sold before that date.
I think they used to call it Super Saturday.
Yeah, right. I think it's just because everyone wants the next Saturday off.
Yeah, probably. And also things in Australia die off after Melbourne Cup. Just generally speaking, momentum just comes right off.
The year starts to end after the Melbourne Cup.
That's Australia.
Yeah.
That's how we roll.
3 out of the 5 homes sold on the block.
Yeah.
So when you look at that in terms of most likely what the clearance rate was in Victoria, it's probably a fair result. In terms of the prices, yes, they were absolutely high-end real estate for the Daylesford market. I mean, if you were spending that sort of money, many buyers would have expected to get 10 acres with it, or 20 acres with it, or have a bit of a rural lifestyle estate, perhaps. They were brand new. They had huge depreciation benefits. And
so you might just explain that.
So brand new accommodation, in terms of tax depreciation, it's a depreciable asset. The amount of furniture and fixtures and fittings that were inside the home. Some homes had caravans and cars and whatnot. So there was on my house alone, there was $5.6 million worth of depreciable asset.
Whoa.
Yeah. So you could depreciate, I think in the first year it was like $280,000 depreciation. So essentially you get a tax deduction of $280,000 year one. And then each year goes by, it diminishes a little bit. But all of the buyers were investors. The person who bought Britt and Taz's home, the house that I auctioned, is going to be putting it on Airbnb. Danny Wallace bought a home. It's an investment for him. And other buyers were looking at all straight out investment. So Daylesford is a market, as you said, similar to the Bowral, I guess, of Sydney. And people do like to holiday there. And it is a beautiful little town, but it's not Melbourne CBD. It's not Albert Park. So there aren't as many buyers who are looking to buy that lifestyle asset or investment in that particular area, where there would otherwise be if you had 4 houses in Albert Park in Victoria.
So how much did they pay for that house that you auctioned?
The one that we auctioned sold for $3,410,000.
Okay, 3.410. Okay.
Yep.
That's a pretty big price. What is it, an acre of land, half an acre?
Half an acre.
Half an acre land. That's a big price. That's probably a lot of house.
A lot of house, and it was beautiful.
But Lewis, would you say that's representative of house prices in a place like Daylesford or in other, comparable areas?
Oh, my take is those prices were a little bit above the market.
Is that because of the pizzazz around television?
Yes, of course, the renos helped, no doubt about it. But the prices achieved were a bit above the market from what I can see. The clearance rate was in line with what we had on the weekend on our numbers.
In Victoria?
In Melbourne.
Yep.
So that fitted fine. Great prices. Great prices.
I think the couple of homes that didn't sell, I feel for the contestants because they didn't make any money. But just if you just think about real estate in general, they might struggle to sell.
Wow.
They might struggle to get the reserve prices.
So is
and
this
the reserves
new? Is this new, Damien? Like is this a new phenomenon now?
Not really. I mean, I think that the show's the show.
Yeah.
But in terms of the real estate value in the markets, they may struggle to sell. And look, we might even see that they end up selling for significantly less after. It's unknown.
And that wouldn't be the first time. I was
That's
mentioning before with Damien, remember the first block, which I think was back in 2004.
Roscoe Street, Bondi.
That's right. And they sold for very good prices at the time. I think it was circa around $800,000. But 2 years later, I think two of them sold for below the price achieved at the block by a significant margin.
That's interesting because that's sort of where I'm getting to.
You'd like to own them now, though.
I'll buy them any day for $800,000.
That's right.
But just on that, so is it fair to say, and the data would probably indicate this, and you definitely would know this, Damien, through just your experience, property has to be a long-term investment in terms of profile. You can't think of something like I'm going to buy it now and I'll flip it in 2 years' time because we have seen that you make money in 2 years' time, particularly just after COVID. But where are we coming back to more normalized property investment criteria?
I think there was particularly like New South Wales and all across the country, there was a significant boom coming out of the COVID period and interest rates were incredibly low. I mean, property booms are always driven by the ability to borrow money and confidence. And I'm sure other factors also, but they're two big drivers. The price increases that we saw were significant and we expected when interest rates started going up for the market to come back a bit, but it actually did the opposite, kept going. And I mean, so that was an exciting time. Are we moving more into a normalized period right now? Hard to tell, but the market's certainly not booming, but it's doing very well. I think of all the states, in my view, Melbourne would be the place that I would be looking to wonder whether it's going to start improving significantly because it hasn't done as well as the other major capital cities for quite some time because of their...
Could we look at a different way though, Damien and Lewis? Could we look at a different way? Could we say that maybe the other states have done way too well and that they could actually come back more to the field and be more like Melbourne? Or should we take Damien's point of view that Melbourne has not kept up with the field and that we expect Melbourne to kick on and catch up to the field? In other words, continue to grow like the rest of the field has.
Well, I think we need to ask ourselves, why has Melbourne underperformed?
Yep.
And I think we can point to a bit of a sour economy. Of late, of course, crime's been in the news a lot. These things impact upon the attractiveness of real estate, not just for locals, but for investors.
Once one of the most livable places in the world.
Correct. And so I think Melbourne has been a little bit on the nose for people considering to move interstate to live there and for investors. As a result of that, it's true that the price growth has been slower compared to nearly all other cities, except for perhaps Hobart in the last 12 months, 24 months. Will it pick up? It will eventually. But I'm just wondering, will it take a change of government before we see a meaningful pickup in the economy and therefore home prices in Melbourne? Now, that all said, it's looking good value. Like on our numbers, we haven't recorded higher rental yields in Melbourne since our series began in 2009.
Meaning what?
So the rental yield you purchase a property on. So at the moment,
relative to the price.
That's
Rent
right.
Relative to the price.
That's right. So the return that you're going to get, a gross return. So you're now looking at gross returns on Melbourne units approaching 5%, and that's the highest I've ever seen it. So that's a nice return for the risk. That's a way of looking at it.
That's Canberra style returns.
Yeah, all regional Australia style returns in some respects.
Yep.
So it's looking like relatively good value compared to the rents.
So their rents have gone up. The value of the asset hasn't gone up in line with rents. Rents have gone up faster.
Yes, that's right.
And therefore the yield's better.
Yep.
But their property tax was the big thing, surely, that really slowed the market.
We might just explain that. So we're talking about a land tax in Victoria.
Yeah, and I guess ultimately when taxes are changed, and it was a significant change for Victoria, and people started selling and property prices haven't grown. But it takes time to get used to the change, and maybe there's been enough water under the bridge now for people to get used to their property tax.
Well, the yields have adjusted
Yep.
to make it more rational decision to go and buy property in Melbourne for example, to rent it out as investment.
Yeah, and as Louis says, changing government it would certainly give another vote of confidence to people. And like, Melbourne's a great city. It's an unbelievable city. Personally, I find it too cold, but it's a great city, and it's a great city to live, and they've got amazing culture in Melbourne, and it is a great place to invest.
So could I ask you both, do you think well, we hear about the share market being too frothy, and it just keeps going up and up and up and up, not only here, but also in the United States. Do you think our property market is too frothy across the country? I'm obviously talking averages, but let's leave Melbourne out for the moment. Sydney, Brisbane, Adelaide, Perth, Hobart, for example. Hobart has done too well lately. But do you think our property market is ready for a readjustment downwards?
I don't think it's in a bubble right now. There's no evidence of that. We're not seeing skyrocketing auction clearance rates, for example. We're not seeing housing price growth at, say, 20% plus.
So what are the data points you look for and to see whether or not it's too frothy or there's a bubble? You just mentioned a couple.
So auction clearance rates, the actual price growth, what vendors are doing as well.
Can we look at the auction clearance rates?
Yeah.
When you say auction clearance rates, you automatically know what that means. But you're looking, if auction clearance rates are at 60%, is that okay? Or you're talking about bubble is 80%? What? 90%?
We could be opening a can of worms here, but it all depends on the measurement you go by. So we measure auction clearance rates, and I can tell you, for example, last weekend in Sydney, we recorded an auction clearance rate of about 53% and about 58% for Melbourne. Those numbers are about 10 percentage points higher than what we recorded this time last year. Now in the 50s,
better.
So it's definitely a better auction market than what we had this time last year, but it's not a booming auction market. A booming auction market on our numbers is when you start seeing auction clearance rates above 65%. And this is why I'm saying open a can of worms, because if you open the paper, you'll see clearance rates being quoted at 70%, 80%. They're preliminary clearance rates. I don't agree how they're calculated. That's been a long-term bugbear for me, but that's just how it is. But going back to the question, the clearance rates right now suggest a market that is moving up in single digits, so like along the lines of 4 to 8%, but not booming. And so for sellers, what this means is that if you misprice your property in this market, the property's not going to sell. In a boom market, the market catches up quickly to that seller, and eventually they can sell, even if they've been outrageous with their asking price. Normally, the market will eventually catch up in a couple of months, a few months, and then it sells. But this is not the type of market we've got right now. We've got more of a balance to a slightly favouring sellers market, in my view.
So it's in favour of the vendors.
It's in favour of vendors compared to where we were this time last year. But it's not massively in favour of vendors.
And do you see that in the room?
In Sydney specifically, on the weekend, our clearance rate was 64%.
Is that? But what about everyone else's clearance rate? Because you might have just been better at clearing.
No,
I've seen you in action, Damien. You don't leave nothing on the table.
Well, I only did one auction on Saturday, and that was in Daylesford.
You make them pay though.
Look, our our clearance rate for the month of October will sit circa 70% in Sydney Metro.
But how's it compared to the rest of the...
Well, totally agree with Louis in terms of the Saturday clearance rate you see in the papers is you can generally take, I reckon, about 10% off that.
That's right.
Because not all the auctions are reported. And how they find out what auctions sell and what ones don't is that they work on, they use some data points that agents are entering information in. They also phone agents, and they have a way of collecting the information. But if the agent didn't sell and they don't want the result in the paper, they don't answer the phone call.
Right.
So there's a lot of results that are not part of the clearance rate. And when an agent does sell and they want the profile and they're saying, yeah, we sold it and this is what it sold for. So we feel that our clearance rate is very accurate because we tell the truth. We know if it was withdrawn.
And I've noticed Cooley Auctions in the past, and we've never seen any issues there. And you're betting our benchmark, mate.
Yeah,
which is a good thing.
It is. I think one thing that a lot of agents are getting in the habit of is actually moving auction dates. That's what I'm starting to see. So if there's no interest, there's no interest in the property, they'll move the date by 2 weeks, 3 weeks, 4 weeks.
They'll put it back.
So I'd be interested to come back to your question about, is the market a bit frothy? I struggle to see how anyone's going to slow the market down. I struggle to see how government can change the things. Like a one-bedroom unit that you're buying in Sydney, Brisbane, Victoria, wherever you're going, in any capital city, I struggle to see how it's ever going to be 50% of what it is now. It's not going to happen.
Well, what about because a lot of people sort of delay their decision to go to market to buy. I'm talking about buyers, because they think maybe it's going to come back a bit. It's going to pull back a bit.
Yeah, trying to pick the market, Mark, in terms saying that the market's going to come back it's just crazy. There's actually a famous old photo of a guy standing at a bar.
He used to be in front of a real estate agent
with a big beard and
beard.
It must have been 90 or saying waiting for the prices of real estate to come down. But we have inflation, so the value of the dollar changes. And when I first got into real estate, you could buy a house in Kensington for $750,000, and that house now is like $4 or $5 million.
And that was sort of my point about Darsford before.
Yeah.
Like it's now you're paying $3.5 million.
The very first auction I ever did was a one-bedroom unit on Cleveland Avenue, Surrey Hills, and it sold for $330,000.
Wow!
And it'd probably be $1 million now, or $850 to $1 million, maybe something like. Probably would be over $1 million. So, is it hard for people to get into the market? I think Louis and I were talking about this a minute ago. Transactional costs for buying and selling in and out of property is probably one of the biggest things that, in my view, forces people to stay in their homes longer.
In Sydney, the transaction costs on average now would be around circa $200,000.
It's huge.
Now, what are we talking about? Stamp duty, etc.
Stamp duty, legal fees, agent fees.
Yep.
Sorry, Damien.
Well, I don't get the agent fee. Don't worry, I'm paid for service.
But the stamp duty is number one.
Yeah.
And what happens with stamp duty is we've all been suffering from bracket creep.
Right.
So as prices have been going up, the government hasn't been indexing down the stamp duty rates. And so proportionally, we've been paying more and more stamp duty.
Per transaction.
Correct.
Yeah, because the purchase price is going up and puts the stamp duty into the next level all the time.
So think about a semi-retired couple maybe looking to downsize. And so they're living in, say, a 4-bedroom home. They're looking to maybe move into a 3-bedroom unit. They're going to be up for $200,000 plus in transaction costs in doing that. Now, they're
dead money.
That's dead money. And it's a lot of money for someone that's, say, on a middle income or even an upper middle income. And so what happens is that they stay empty nesters.
How do you mean?
They stay in their large home.
Because they don't want to lose, they don't want to spend a couple of
$100,000. They don't want to spend a couple, they're already emotionally attached to that home.
Yep.
But the notion of downsizing is not as easy as one thinks because of these transaction costs.
Wow. But people will stay there. Like, let's say they're in a $5 million house.
Yep.
They can go and buy a place for $2 million. That's going to cost them $100,000 stamp duty or close enough.
Yep.
You're saying that they won't make that decision. They'd rather stay in the $5 million house instead of going to buy the $2 million place.
Oh, look, I'm probably thinking of $5 million house versus a $3 million or something like that.
Yeah.
But in principle, yeah.
Yeah, because and particularly older people, because they're sort of a bit old school, they say, well, that's just money going nowhere.
It's dead money, and it is dead money.
And we earned it.
Yeah, that's right.
By being patient, paying a mortgage off.
Yeah, and like I said, that's over and above the emotional attachment they've got to their home.
Yes, already they're sort of already they're behind the eight ball. Is the Damien? Are you seeing a lot of these empty nesters, so-called, selling their expensive houses? Is that like where a lot of the vendors are coming from?
We absolutely see. I mean, the downsizer market in across all capital cities, I would have thought would be pretty strong, because anyone who is selling their big family home is doing incredibly well, and they're selling it under competitive auctions, and whether it's auction or not, they're selling for big prices, and they're trading in and they're buying something smaller. But as Louis said, their stamp duty that they're paying is huge. So I would have thought, and Louis would be better to answer that than me, but I would have thought people are staying in their homes a lot longer today than what they would have been 20 years ago.
Well, put it this way. As mentioned before, back when we started first measuring listings in 2009.
This is SQM?
SQM Research. Yep. And anyone can go on our website and they can see this for themselves. There were more listings in 2009 than what we have now.
Really?
Yeah, and think about that. Absolutely,
that's overall.
And we did a report.
But less houses, though. There would have been less houses at the same time, because
there's less houses. There's less population. Yeah, we've got more homes now, more population. You would think you would see more turnover, but we're not. We're seeing less.
No,
that's true.
And what do you put that down to?
I put it down to the transaction costs,
and that's why state governments are doing so well.
Well, yeah, they do well in property booms. They don't do so well in property busts. So logically, it would make sense for a state government to have a more stable form of revenue, I would have thought.
So do you think, okay, that's very interesting. So do you think that if the stamp duty, so let's say the government needs to raise, I don't know, 100 billion in stamp duty as part of their revenue for balancing the budget.
Yeah.
And let's say that, just to make it easy, they sell 100,000. Then normally there's 100,000 houses, and the stamp duty is 5%.
Yeah.
100,000 houses, the average. Let's say the average house is $1 million. So and the stamp duty is 5%. Are you saying that maybe if they drop the stamp duty to 2.5%, you might get, instead of 1,000 houses, so you might sell 2,000?
Yeah, absolutely.
But they don't miss out. They still get the same amount of money.
Well, I believe so. I think the economics will play in their favour, but no one in government seems to want to pull that trigger.
But is that a way of solving the lack of supply?
It could solve many things, yeah, absolutely. You're going to see more liquidity in the market.
But do you think that would mean as well, though, that because you've gone from 1,000 houses for sale to 2,000 houses for sale, that the people who are downsizing might think, hang on a minute, now there's 2,000 houses to choose from. I might not get the super profit I was getting before on my house.
Look, you might see a little bit of that, but I think they would make it up on the other side. I don't think...
Because they pay less too.
I don't think there's any evidence out there from various other governments worldwide who have reduced stamp duties, etc., that you see some time of downturn in the market. You see just simply a more liquid market. It might mean more price stability for a period of time because of the increased liquidity. But no, you don't see a collapse in prices because of that. No. And let's think about this. Remember, once upon a time, when you bought shares on the ASX, you had to pay stamp duty.
It was 6 cents every $100.
That's right. And why did they get rid of the stamp duty? Because they wanted to improve the liquidity of the market, which was going to improve the economy.
Yeah, that makes sense. But did you get invited to the round table down in Canberra this year by our treasurer?
No, I don't think they like me very much.
No, I don't think so either. But you and I, neither one of us got invited. But we have been invited to previous governments of different colour. But is that something you would have submitted? Did you submit anything?
Yeah, we've submitted things in the past surrounding this issue on stamp duty.
That's very interesting. Lower stamp duty may result in more transactions.
Absolutely, and then they get their revenue back.
Yeah. And they get it back anyway, because whoever's selling is probably going to buy anyway.
Yeah, that's right.
And you'll sell more of them.
Yeah, correct.
Or abolish it altogether.
Yeah, or you could
broad-based
or abolish it altogether there, and then of course you'd have the revenue replacement, which would be
a land tax.
A land tax, and I guess the issue with that is how popular is that going to be?
Change is always difficult.
Yeah.
And when you're making a lot of money out of something, to turn the tap off and run the risk of not making that money is an incredibly difficult decision.
Particularly in state governments, like if you look at Victoria, but particularly in state governments where budgets are a bit of a problem.
Yeah.
Or deficits are a bit of a problem.
Now, the counter may well be a government will say, well, we've reduced stamp duty for first home buyers. Fine, yes, they have. But they haven't reduced stamp duty for second home buyers or the downsizers.
Yeah.
And this is what we're talking about to increase the liquidity.
And bring more stock on.
Absolutely.
You need more stock. That's a very interesting point. I've never thought about that. That's a great point.
Be interesting to look at New Zealand, because in New Zealand they don't pay stamp duty.
Oh, don't they?
Yeah, I believe there's no stamp duty.
No capital gains tax either.
I believe,
Definitely no capital gains tax.
No capital gains tax, So I might want to check that stamp duty. But if they don't, it'd be interesting to see what the market's.
Well, house prices haven't done as well in New Zealand as they have done here.
Yeah.
No, they haven't. Well, they had a recession, of course.
Yeah.
They seriously cut their migration intake as well. And they managed to increase supply. New Zealand's another story we can talk about, I think.
Yeah. We don't have many New Zealand listeners, so we probably won't talk about it. So let's just, what are you seeing now, right now, in terms of the data you collect? And your data is only a week old most times. And then are you seeing property as still being one of the great assets for Australians to invest in? Now, let's say if I looked at a Sharpe ratio, like if I looked at over a 20-year period, same for stocks and properties and, built-in risk, where's the asset class called real estate sit?
Very good question.
Do you apply Sharpe ratios to these things?
Yes, you can, or return on equity.
Mm-hmm.
And this is a very critical one, because since you can gear property more than the other asset classes, and presuming it does rise, your return on equity is generally higher than what you can get on any other asset class, perhaps except for Bitcoin right now, assuming Bitcoin keeps going up. But it's a gearing which enables a massive return on equity to take place in your portfolio.
So just to explain that, what you mean by that is that the amount of money you put in terms of cash into the property, like you might buy $1 million property, you put $100,000 in, or maybe $200,000 in there, you borrow 800,000.
Yep.
So, and if the thing goes to $1.2 million,
you've doubled your money.
100% on your money, on your 200.
You've doubled your actual money that you've put in.
Yeah, that's your return on your equity.
That's right.
As opposed to the return on the total.
Return on the total asset.
Yeah. So you've got 20% return on the total asset.
Yeah.
The return on your equity is 100%. There's not too many asset classes that do that.
Correct.
But in terms of risk, if you risk adjust it, what would you say in terms of that asset class if it's risk adjusted? Because it depends on the date, the cutoff date, of course, the terminal date.
It does. It depends on the time period you're looking at as well. Of course, these things can go very pear-shaped when you gear up into an asset class that starts going south. So one example, the town of Karratha over in Western Australia. Back in 2012, the median house price in the town of Karratha hit $1 million. We had a commodities bust, essentially, over in WA between 2012.
Karratha being a mining town?
Yeah, it's a mining town. And the median house price fell from $1 million down back to $350,000.
So if you measured the return on equity, and that was the cutoff date, that was the terminal date. You picked when it was 350.
So if you picked the worst times to buy and sell, you were going to you would be wiped out.
Yeah.
Right. You would be in negative equity. And that's the danger, of course, when you gear up. That said, though, that's an outlier.
Yep.
Like, this doesn't generally happen. But the point being is that, look, yes, property can be volatile, but historically, when we look at least at the capital cities and at the national level, it hasn't been volatile. It's been quite liquid overall. Price movements, in a downturn for most capital cities in the course of the year, have been no more than, say, 7 to 8% when we have a downturn in a year. They've been, top to bottom, no more than, say, about 15%. That's not to say it's impossible for it to fall more. It's highly unlikely. That's the point I'm making. And generally, when you look at the volatility of those price movements, they're far more stable than what you'll get in equities and precious metals, etc.
So you made a very good point. So maybe we need to dig into this just a little bit. So it would seem to me that price volatility on the downward, in Australia at least, over the last 20 years has probably been affected where there's been structural change. So let's say during the GFC, there was a structural change. I mean, a global structural change. Could be Australian structural change too. That example of Karratha, or COVID also initially had a bit of a downturn.
That's right.
Turn around the other way. But also we haven't had too many recessions, and they've all been pretty mild. So if we had a major recession, maybe that could be the case again. But we probably haven't had a major recession for a long time in Australia. I'm talking about. Karratha example you just made, that's a structural change because the town, as a mining town, relies upon mines being,
that's right,
bringing people in. Yeah, and like they might be selling, I don't know, copper, and if they might be pulling copper out of the ground. If copper all of a sudden has a massive downturn for some reason, then they'll stop the mine. Well, good example is Mount Isa.
Yep.
Right now, I mean, the government's coming to save the joint, but they just can't operate because of the cost of power, etc. That's a structural change.
Yep. And it's also an example of a property location which is highly susceptible to a single economic base.
Yep.
So in Sydney, let's compare Sydney. We've got a wide economic base. Most capital cities do.
Yeah, so that's what I was going to come to. Yep. So when you at your business at SQM Research, you look at risks in relation to areas where someone might be buying and or selling.
Yep.
Is structural change, the potential for structural change, is that something you look at, and does that result? Is the result of that the only thing that's really going to affect somewhere like Sydney is a massive recession?
Yep. Yeah, absolutely. It's something we look
or another GFC.
It's something we absolutely look at. We actually issue what we call quantitative ratings, which take into account the risk reward on every postcode in the country.
Every postcode.
Every postcode.
Is that published on your website?
You've got to buy it, but it's on the website.
Yeah, but you can get it if you pay for it.
Yeah, that's right.
So what does that mean? So let's say I'm looking at buying in I don't know, Townsville.
Yep.
Or I'm looking at buying in Aspley in Brisbane.
Yep.
And I pay the subscription fee, whatever it is.
Yep.
What will that tell me?
That'll tell you the rating of that locality and what's driven that rating. So has it been longer term demographic factors which have driven that rating, and or has it been more shorter term factors driving that rating?
Can you explain those two things?
Yeah, okay. So longer term demographic factors would be, say, for example, long-term population growth of an area. Is it running hotter than average, or is it running cooler than average? Another example of demographic change would be the age of the area. Is the median age of a locality rising, or
you mean people who live there?
Yeah,
median age of its occupants.
That's exactly right. And what are incomes doing over the long term? Are income levels accelerating or decelerating compared to, say, the statewide average for that area?
So I'd want to see them accelerating, or at least keeping pace with the statewide average.
Exactly. So when I'm looking personally for a property for investment, I tend to like looking at areas where you're seeing stronger income growth.
Stronger than
the statewide average.
Right.
Stronger population growth
than the statewide average.
Yep. Relatively low unemployment, and I want to see a wider economic base. So I will personally never go into, say, a mining town.
So wide economic base means it's not relying on one
undertaking. One undertaking. It's relying on at least 3 or 4 bases there.
So like, let's say Hunter Valley.
Yep.
Or let's say, make it even more so, Newcastle. Let's pick that. So, yep. I mean, you don't have to tell us what the rating is, but what would Newcastle sort of broadly be looking like in terms of if someone went and paid some money to get onto your research page?
Okay, so we would take into account Newcastle. We'd look at, okay, what is the economic base? In this instance, there is some exposure to coal.
Mm-hmm.
There's also, of course, you've got
happens to be the biggest coal export port in the world.
That's right. Yep. So you've got a port there as well, and more than just coal goes in and out of there.
Yep.
So you've got that. You've also got, as mentioned, close by to Hunter Valley. So is Newcastle benefiting from the Hunter Valley? And then in particular for Newcastle, are we still calling Newcastle completely separate from Sydney, or is it actually starting to benefit from the economy of Sydney
Absolutely.
in an indirect way? And given the sprawl, given the affordability issues of Sydney, we know people have been moving to Newcastle and basically commuting back to Sydney for work.
Wow.
And the reason why they're doing it in Newcastle is because it's far more affordable than Sydney, and they can make it work, particularly if they can work from home, say, a couple of days a week.
Okay,
be good to have a fast train or something that went from there to Sydney, because I mean you can go and buy a 1-bedroom unit in Newcastle CBD circa $600,000. You can go 10 minutes away from the beach, short 10-minute trip to the beach to a place called Katara, and you can buy 3-4-bedroom home for just over $1 million. So there is value for people who are looking to either buy an investment property, or young couples that starting a family that don't want to pay Sydney prices, that will can't pay Sydney prices, and will go to Newcastle and surrounding locations and get a great apartment or a great house for significantly less than Sydney. The travelling to Sydney, gosh, I would have thought would get pretty tiresome, 2 hours each way. But relocation
if you
is
look
a big
at
thing.
your mum's place or your grandfather's place, something like that, for those 3 nights, because you're working 3 and 2, you're working 3 in the office and 2 from home. Makes sense. No accommodation cost.
Yep, and a lot of people do it.
Yeah,
yeah, absolutely. A lot of people do it. You would think for a period of time though, Mark, wouldn't you? Be pretty hard to do that long term.
Yeah, but it might be a period of time where you can save some money.
True.
It might be a period of time where you ride the market. Your Newcastle probably might go up in value, and you give you enough time to save a bigger deposit, which means you can now buy in Sydney, or you can buy in Gosford or somewhere closer.
Yes.
And just repeat the same process over and over again.
Yep.
So, let's talk about regional for a moment. I like regional.
The Illawarra would be similar.
Illawarra being Wollongong.
Wollongong.
Yeah, Port Kembla.
Yep.
I like regional.
Yeah.
So, what is regional today, though? So is Newcastle considered regional? Gosford?
Newcastle is, in our view, considered regional, but it as mentioned before, it's getting some benefits from Sydney being where it is. Central Coast is officially regarded part of Sydney now.
Oh, wow.
So that according to the ABS.
Wollongong?
Wollongong is, I don't think it is officially regarded as part of Sydney. It's just outside the border. But it's pretty close. It's closer to Sydney than what Newcastle is.
Sure is.
Oh, definitely.
Yeah.
It's
Hour
about
and
an
a
hour and a
quarter,
half.
yeah.
So it'll probably only be a matter of time before the ABS regards Wollongong as part of Sydney. And look, hey, who cares what the ABS says?
Yeah.
You're closer to town to Sydney than where you are in Newcastle.
So are there regional areas that you guys at SQM sort of earmark and say, maybe you don't do this, but these are areas we should be watching as places where we should be thinking about maybe investing in the future?
Absolutely. And they tend to be areas, these regional satellites around our largest capital cities.
Yeah, let's call them satellites. So we're not talking about Orange, for example,
No,
or
we're not.
Wagga, although that is the biggest regional town in New South Wales. And by the way, good place. Orange does really well.
Orange has been picking up. Yep.
Dubbo, Orange,
Mudgee,
Wagga, Mudgee, Ballina, these places are killing it.
Yep.
But in terms of places that are satellite regional areas, you're saying places that are close to the city, the major city in the state.
Yep.
So, let's pick on I don't know what's just outside of Sydney now. We talk about Wollongong and
Blue Mountains.
Blue Mountains,
Yep.
right? So are those places doing well?
They have been doing well. Blue Mountains did particularly well when we were in lockdown over COVID. Then it came off a bit after that. So I suspect you had some people moving back from the Blue Mountains back into town once we're all coming back into work. But yeah, I mean, the Blue Mountains is definitely more affordable. It is officially regarded as part of Sydney now, and it's definitely one of the more affordable areas of Sydney. Of course, you've got the commute time.
What about places like, how important is it from your research, and I know Damien will have a view on this for sure, that regional areas for people in Australia to invest in need to have, they do better if they're near a beach. For example, Ballina or Southeast Queensland. My God, this has gone mental.
It has.
Gold Coast.
Yeah.
What's going on there? What are the qualitative reasons why people are just making that choice? Like one of my sons actually just settled on a place up in the Gold Coast. He doesn't even live there. He lives here. What's the big deal now? How come Gold Coast all of a sudden is doing so well? How come places like Ballina are doing so well? Pottsville, all those other areas up and down there.
There's multiple reasons for it. Let's go back in time. Remember, once upon a time, the Gold Coast used to be a boom-bust town.
Yeah, it was an indicator.
Yeah.
It went first. It was last to boom and first to bust.
Yeah, exactly. One of the reasons why it would bust is because supply was very responsive to the demand at the time. This is going back to the days where developers would build on speculation. They didn't need pre-sales. The banks would lend them the money, they could just build. And of course, you had a very pro-development council there on the Gold Coast. You kind of still do now, but I would argue not as what it used to be.
Harry Trigger tells me that's one of the few places he likes to develop in now.
Yeah, and I can understand that because the council is still relatively pro-development. But the truth of the matter now is nowadays on the Gold Coast, firstly, land has kind of run out to an extent to build high density. So I've just noticed in the last 2 cycles, the supply response has not been as aggressive as what we've seen, say, back in the 1990s and back in the 1980s and 1970s. And that could also be the fact that, hey, you as a developer, you can no longer build on spec. Yeah, you got to get the pre-sales.
Well, too many went broke.
Yeah, that's right.
Buildings weren't finished.
So you've got that going on. Over and above that, of course, you've still got this very strong regional population growth occurring in southeast Queensland. It is definitely still one of the strongest in the country, north of 2% per annum.
Its growth is 2% per annum.
Yes, that's right.
2+.
It's 2+. That's right. That's stronger than what you see in Sydney, stronger than what you see in Melbourne. It's one of the strongest regions for population growth still. The only issue we're seeing now is that prices are becoming rather unaffordable. And indeed, the median rent on the Gold Coast is higher than the median rent on Sydney.
Really?
Yeah, no joke. It's higher. Now,
wow.
There's maybe some structural reasons for that. Okay, like you've got more coastal property on the Gold Coast than what you have in Sydney.
A greater percentage of glam.
But I can assure you there was a time when that was definitely not the case. This is a recent phenomenon.
And there is like zero, I think Gold Coast is like 0% vacancy rate at this stage.
Yeah, it's been around 1% for some time.
Yeah.
Now we are starting to see rent stable out, but that they are at a very high level, a level where I think it's hard for the average income earner on the Gold Coast to make ends meet.
Is that because of Airbnb and that Airbnb is taking a lot of these places out and like out of the market, and therefore if you're a resident there's not that much to choose from?
That would be a contributor. I did some research on this a few years back, so I don't have recent numbers, but there were areas in southeast Queensland where there were more Airbnb properties than what there were for long-term leasing.
Wow.
Yeah, and think about there was once upon a time there were no Airbnb properties; they were all long-term leasing.
Yeah, and
so it's really cut into the long-term leasing market in certain areas.
Well, and of all the people you talk to, Damien, you always everybody talks to you. You know everybody. What are you hearing about places like regional areas? I know you don't. Well, you just auction off down in Dallas, but just generally speaking, as more metros,
I auction in Wollongong, and I also auction in Newcastle. So yeah, we do a lot of auctions every week, but in both those locations, Newcastle, Wollongong, both doing really well. Obviously, not doing as well as what Sydney is doing, and our clearance rate is less in those markets, but it's picking up in Newcastle. And yeah, affordability is a big thing. We're definitely seeing at the coalface when we're doing an auction and I'm talking to the agent, where are the buyers from? But a lot of times, this buyer's a Sydney buyer, or these buyers are buying online from Sydney. There's a lot of Sydney influence in both of those regional markets.
So you might explain that too, Damien, like your process. So you walk in an auction room, you're not the agent.
No.
The agent, let's call it, brings you in to do the auction itself as an auction expert, but you ask a series of questions of the agent about
what's the reserve.
Yep.
What will the owner sell for?
Yep.
And there's generally about a 3%. Well, on average, we reckon there's about 3% below. So whatever the reserve is, generally about 3%. Some owners set their reserves crazy high, but they will sell for a lot less.
Yeah.
Some owners set their reserves at a really reasonable number in anticipation that they're going to get more.
Yeah.
What's the reserve? What will they sell for? How many registered bidders are there?
And so what do you want to know about the registered bidders?
I want to know how many there are, because it changes the way I interact with the buyers. How many are there, and what's the reason why they're buying, and how confident is the agent that they're going to get to the reserve and more? They're all factors that determine how large my increments should be and how hard I should be in terms of pushing for higher numbers. So if the agent's confident it's going to get to the reserve and sell for more, I might be pushing hard for on the increments, or
like 20,000,
20, 50,000, or I actually, in some cases, I might be more accepting of lower bids because I know that we're going to get there anyway.
Yes.
So let the buyers kind of almost not do what they want to do, but let everybody participate, because an owner might have a high reserve, and I want the owner to see, look, we had 6 registered bidders here today. They all bid. This is what it's worth.
Yeah.
And some owners need to see that competition. Whereas if you only have one bidder and you get one bid, the owner thinks, I don't think I've got the best out of this.
Yeah.
So I'm going to dig my heels in and I'm not going to sell.
I won't sell.
Yeah.
So, and do you find out where the bidders are coming from? So when the agent says to you, look, Damien, we've got 5 bidders in the room, 3 are, and we're in Newcastle.
Yep.
But 3 of these bidders are coming out of Sydney.
Yep.
Do you get that type of information?
Absolutely.
And what does that mean to you when you see that?
It doesn't necessarily, like, sometimes those owners that are in Newcastle or Wollongong think, oh, we've got Sydney buyers. How good's this going to be? But it doesn't always work out.
That's what the vendors think.
But the vendors think. It certainly does not always work out that way. I mean, the market's the market. So a buyer is a buyer. I like to know that information personally, because I like to know where the buyers are coming from. And they're not all Sydney buyers. There's a lot of locals. But the Sydney buyers are the same as the local buyers in the sense that they've all been told the same price. They understand where they need to be. But generally speaking, they may have a different view on what the property's worth compared to the local buyer, because they've been possibly thinking about getting into the Sydney market, and that 1-bedroom unit they were going to buy in Sydney is $850, but the 1-bedroom unit that they're going to buy in Newcastle is $600. And the way that they come to terms with that in their head about, okay, we're going to move to Newcastle, we're going to buy a lot, pay a lot less. Whether you pay $600 or $610 or $620 or $630 is more palatable than having to pay $850 in Sydney.
Yeah. And are you seeing many investors turn up to these?
Yes, there's more. We see more investors coming into the market for sure. Yeah,
because we're seeing in our lending business at the moment more investor borrowers than we've ever seen before. Normally we run about 30-35% of our volume as investors, but it's getting upwards 42% at the moment, which is that's a significant difference.
But for homeowners, people are making lifestyle choices, aren't they, on where they want to live, like Southeast Queensland or regional areas like we talk about. Whether you go to the Blue Mountains or whether you go to the Illawarra, for example, is a decision on whether you want to be in the mountains or whether you want to be coastal. And we see a lot of retirees moving to these geographical locations also. What type of lifestyle do you want to have? Where do you want to do you want the cosmopolitan lifestyle? Do you want the quiet lifestyle? Do you want to be by the beach, or do you want to be in the country?
What if I was to say to you guys, here's $3 million, you can buy 3 properties each, East Coast only, Queensland, New South Wales, Victoria, just to make it a little simpler. Where would you buy?
I'd buy one in Double Bay. I'd just buy one.
Buy one? Okay, that's good. But why?
What I love about Double Bay particularly is, and you might struggle to get one for $3 million.
You will.
A brand new one, you certainly would.
Yep.
But the capturing of the big downsizer market,
why downsizers moving to Double Bay?
Because they're selling their house for 20, and they're going and buying one for 10. So 3 million is probably not the right example, but they're
you might get an older
and
one.
yeah, and they're absolutely like 2-bedroom unit in Double Bay the other day. I think sold for which was a good price. I think it was 1.6 to 1.7. So no parking, 2-bed, red brick building, ground floor.
And there still are a few of those around.
Absolutely, but those types of buildings in general are being acquired, amalgamated, knocked down, and big ones are being built. A lot of the smart developers are building for the downsizer market. The downsizer market is exciting because they have bigger budgets, and when they find the property that they want to buy, whether they pay 5% more or 10% more or 20% more is less significant than a first home buyer competing to try and buy the first property that they've ever bought, paying 5% more or 10% more. So they don't have the ability to do that.
On that $3 million example, Damien, would you? You're not going to get a new apartment in Double Bay, but you might get a second-hand one or an existing apartment, one that's maybe 20, 30 years old or even older.
Yeah, you might.
Would you still spend that $3 million in Double Bay for one of those apartments?
I would. Yeah, I like it. I think.
Is it because you've got a really strong market coming into it, like buyers?
There's as I said, there's a strong downsizer market,
and not as price sensitive
for that type of asset. If I'm an investor, and I take a step back for a moment, if I'm an investor and I was looking at where am I going to spend this money, I mean, it's hard to buy 2-bedroom units now. Like for example, if you say Coogee, for example, you want a 2-bedroom unit, you're going to be spending probably something around $1.4 to $1.6 million for a 2-bedroom unit, and perhaps you go and buy 2 of those, or perhaps you buy a 2-bedroom unit in Coogee, perhaps you buy a small terrace in Erskineville, for example, and you have one in the inner west and maybe you have one in Coogee.
Well, why would you do that?
Well, I like the rental return on those.
Yeah.
I like the affordability for the rental return, and I like the long-term growth prospects of both of those locations. In inner west, Newtown, Erskineville, St Peters, all through there, the great markets, and the coastal region I love. So I say you're never going to go wrong in those types of markets. Good long-term growth and set and forget type assets.
But you pick Sydney. You didn't pick, say, Gold Coast.
I like to be around the properties that I invest in.
Let's say you live in Queensland.
Yeah.
Where would you go in Queensland?
If I lived in Queensland, definitely want to be around Brisbane, around CBD. I don't know the market incredibly well. I've never lived there myself, but I love in and around Brisbane. Coastal I really like. Look, one of my mates, Dane Atherton, has an amazing business up there called Coastal, and they sell all along the coast. And I was only speaking to Dane this morning, and their sales are through the roof. Their numbers are up significantly, and there's a lot of interest. There's a lot of activity going into those markets, and that has changed significantly from the boom bust type market that we spoke about.
And do you think 2032 Olympics has any part to play in all this?
I think that it's going to have a big part to play in what people are renting properties for in and around there. But the market's improved significantly for the last 5 or so years. It has. I'm certainly hearing stories of it's not as good as it was, but it's still very good. So the agents up there are really quite positive about the Brisbane prospects and all down the coastline.
Louis?
Well, okay. Well,
it's not fair because he knows the whole country. He's got data everywhere.
What I'll do is I'll talk a little bit about my own portfolio. So watch out, I'm talking my own book, and then just general views. So firstly, one general view I've always held: always hold Sydney. Doesn't really matter too much where you hold in Sydney, except for the CBD itself. I've always noticed apartments in the CBD of Sydney underperforming. But outside that, if you hold in Sydney, the probabilities are in your favour that over the long term you're going to outperform.
Long term means what?
I wouldn't buy
10
a
to
CBD
20
apartment.
years.
Right.
10 to 20 years. So I naturally hold Sydney. I agree with the sentiment surrounding Brisbane. And in fact, Southeast Queensland, I think, is going to be an outperformer for at least up until the Olympics. And indeed, one of these days, we'll look at Brisbane, Gold Coast, Sunshine Coast as just one city.
What do you mean by Southeast Queensland? Though? You're not talking about Gold Coast, just Gold Coast. You're talking about where?
I'm talking Gold Coast, Brisbane, Sunshine Coast.
Right. Okay. Everything south of Noosa.
Yeah.
Yep.
Yeah, including Noosa.
Including Noosa.
Yeah. So I see that area continuing to outperform, notwithstanding I'm a bit concerned about Gold Coast prices right now. Now, in terms of the last property I bought, and this is talking my book, I actually bought my last property in 2021 at Airlie Beach up in North Queensland.
So that's further up than Noosa.
Yeah, that's exactly right. Now, the reason why I did that was because I was noticing in our data that all coastal regions were starting to record in 21 rising rents, rising prices, but Airlie Beach had not moved. And I looked into why hadn't it moved. And when I looked at more of our leading indicators, such as stock on market, I could see some leading indicators that suggest it was moving. So then I did a trip up there, had a closer look, loved the prices up there. So I ended up buying a 3-bedroom penthouse overlooking the Whitsundays, and it's on strata title, not leasehold, as what you see on Hamilton Island. Strata title for $870,000.
It sounds magical.
It is.
I'm talking about.
I'll show you the pictures later on. And so,
which year we're talking about now?
2021. And so I leased it out essentially as a holiday lease. And I'm now picking up a net return on my original price of about 12%.
12% in terms of rental return?
Yeah.
Yeah. That's after everything?
After everything.
And then how about in capital gains? Like what's the gain? The
gain on our valuation, it's now worth roughly around 1.35.
Yeah, so that's 500,000 over, that's 5/8. That's a pretty good return.
Yeah. But yeah, I was able to pick it on our data and I could see other areas moving. Now, this goes against my rule about a single economic base. Okay. So tourism, of course, is a major thing for the Mackay Whitsundays region.
But is that a single economic base, tourism?
Well, it can be a volatile economic base.
It definitely can, yeah.
Yeah. So yeah. Now there is a bit of agriculture there as well, particularly for the Greater Mackay region. But
is
yeah,
there any army around there? Is there army?
Townsville,
it's further
if
up.
I recall.
Yeah,
that's further up. So Airlie Beach wouldn't gain from that. No, I bought it based on the fact that look, it hadn't moved in a long, long time. It was impacted by Cyclone Debbie in 2017, so there wasn't a lot of investor confidence. But yeah, just looking at the data, I thought, no, this is what we want to do. And it's also a lifestyle thing. I've always loved Airlie Beach, so I bought it on the numbers, but also for the lifestyle.
So when you say it hadn't moved for a while,
yeah.
Your views that as a reason to buy. Me, I'd be getting nervous that there's a reason why it hasn't moved, and it's never going to change.
And you need to consider that. That's exactly right. You need to understand the reasons why it hasn't moved in a while.
So how did you do that? What's your process?
Okay. So firstly, I wanted to understand the supply side. When did this penthouse come onto the market? Was it overpriced to begin with? And it did come on overpriced to begin with. It was first came on the market in 2003, if I recall, and the owner at the time bought it off the plan for around circa $800,000.
Gosh.
So you bought it what he paid for it off the plan?
Yeah. 17 years later.
Wow.
17 years later.
Yeah.
Then I looked at the economy of the Mackay region, what's driving the area and what we're seeing on population. And I saw some very good numbers there, and I still do see some very good numbers there. I saw affordable housing overall beyond the tourist areas, very affordable housing, and I saw a very low unemployment rate for the Mackay region. And then I looked at, okay, tell me more about the local council. Are they pro-development, are they pro-economy, or are they anti-economy? Well, Mackay Region Council is actually pro-economy, that's for sure. So that was a tick in the box as well. And then I looked at, as mentioned, more of the short-term indicators. So I was noticing the vacancy rates were starting to fall. And I was noticing stock on market was starting to fall below its long-term trend. And so to me, they were leading signs that we might see some rising prices soon. And that's what triggered me to go in.
Wow, that's a lot of database.
You did a lot more research than I've ever done. Well, he's got the numbers.
But you're buying in Double Bay. And,
yeah, look,
on that example, whereas what Louis done, like it could go either way. From my point of view, I could have gone, wow, it's still the same price it was back in 2003. And I would have gone, well, it's never going to change the price. But what he's done is the reason it didn't change the price probably before is that the population in growth, the vacancy rate is probably high, blah, blah, blah.
So there was this supply surge and then supply stopped in the area.
Yeah.
Completely stopped. So I looked at the potential for forward supply, and I could see very limited potential. So having another building boom in the heart of Airlie Beach is not going to happen. And so I think that too made me think, right, this is a good buy. This is going below fair value.
I think investors should definitely be looking at Melbourne. I feel like it's been rough there for a little while, and if they are going to play catch up, it's coming pretty soon. If it's not already happening. My view. I don't know what are the numbers look like.
It will come back eventually, but I'm just concerned about the headlines surrounding Melbourne at the moment.
You're talking about in terms of what it's like to live there.
Yeah, that's exactly right. I mean, there's concerns surrounding crime. There's concerns surrounding the economy. So what we got to ask ourselves: what's going to trigger the upturn? Is it just going to be affordability on its own? I would argue, you need something else other than just affordability.
Yep.
I mean, I think it's a good point Louis raising now is that when I think about Victoria, I think about its losses AAA rating, so its credit rating is lower than New South Wales, for argument, and lower than the federal rating for Australia. I don't see any way that they're going to recover that rating. So their borrowings, the government's borrowings in Victoria is higher than any other state in Australia, by far. They're running significantly hefty deficits in their state budget. Crime's an issue, which means they've got less money to allocate to more people to stop crime. That's potentially an issue. But fixing the economic crisis in Victoria, I think it's going to take some time. And I don't think the current government is a sort of government who's, by design, is the sort of government who really cares about it that much. And the opposition are going to hold them to task because the opposition down there aren't doing a very good job either.
Very weak.
And therefore, the current government don't have to fix anything because I'm not going to lose. I'm still going to win. If they went to, I saw some numbers yesterday. If they went to an election tomorrow, they would win. Which is crazy. I mean, given the rhetoric down there and the narrative about the place to live like. So, and then you add on top of that, I think, and we've got 57 branches in Melbourne, so I don't want to talk against my own business, but the land tax is an issue. It's only the evaluation is $50,000. So like if you buy a property and it's unimproved value of the land is $100,000, you're paying 5% annual land tax every year.
Yep.
There needs to be a fairly big adjustment on the rental yields to counter that. After which investors say, yes, let's buy him.
And which has been coming as we discussed earlier.
Maybe he's going to buy early.
And he might pick it well. I mean, Damien's got a 10 to 20 year view on it.
Yeah.
You probably will win.
The agents that I speak to on the ground in Melbourne are saying that it's changing.
Oh, right. So this is different. So, okay. So that's interesting because now if the demand is, you and I probably won't, well, you might see it, but I won't see the demand. The demand is first being felt by the agents.
Yep.
Because they're seeing interested parties.
Yep.
And that's
buyers agents that I spoke to, even at the block on the weekend, without naming names, said to me, it's definitely changing. Where the positive upswing is happening.
And to be fair, there could be two triggers to do it.
Yeah.
The cuts in interest rates we've already had, plus a 5% deposit scheme.
Yep.
Yeah, this is the scheme that the federal government's introduced.
Yep.
That basically allows someone with a 5% deposit to buy their first property.
Yes.
Oh, no, and it doesn't have to be first home. It can be anybody. It's just not restricted. So. And the government basically covers the mortgage insurance.
So yes, it is their first home, isn't it?
It is.
It is
their
first home
buyers.
Yeah.
But there's no limit on the amount of money you spend.
There is an upper limit.
The price caps.
Yeah,
there is a price cap.
There's a price cap which they lifted.
Yes,
significantly.
Like I know in New South Wales, I think it's 1.5.
What you're thinking of, Mark, is that they had limits on the income. So it was means
Yeah,
tested.
not
It's no longer
tested.
means.
So you could buy your first home down there if you
Yep.
had never bought a home before.
Yep.
And you could do like just like one of the young producers in here would be buying theirs, and you'd be significantly more money relative to them, but you still qualify.
Correct.
For the government to support you in the mortgage insurance piece.
Yep.
So go to lender and say, listen, I'll lend you lend Louis the 95% on this
Yep.
$1 million purchase, assuming he's under the cap. On the $1 million purchase, you lend him $950,000. We'll cover the risk.
Yep.
We, the government, will cover the risk for mortgage insurance.
Yep.
No need to have to worry about mortgage insurance. So okay, that sort of makes sense to me. If I was to ask you, so you like Melbourne, maybe he's getting ahead of both of us, and he's going to be, he's going to do a killing and build a portfolio down there. He's going to buy it because for you, what you're saying is, what is the proximity of a price rise relative to timing? So, like right now, you're answering my question based on what's a value add right now.
Yeah.
But it's all about time.
Yeah.
He might be buying, maybe not buying the lowest point, but not buying at a time when it's going to.
Yeah, I'm through my data and my sort of view, I think I have the information to time it a little bit better.
Yeah.
But I am taking more risk in trying to time it. That is the reality. That the indicators could be wrong. You know. So, but yeah, I do try to time things a little bit more.
So, and just to wrap things up, Lou, I can't let you out of here without, and Damien as well, I can't let you guys out of here without giving us a prediction. Melbourne Cup Day is coming up. The Reserve Bank's going to meet. We've seen all the data that's come out. There's a lot more data. Some data should come out this week, I would say. Is there something coming out this week? I think it's this week or next week. No, it has to be this week because Melbourne Cup's next week, isn't it?
Could be quarterly CPI.
Yeah, quarterly CPI comes out.
Yep.
The unemployment numbers just come out at 4.5.
Right.
The GDP numbers, quarterly GDP will probably come out at the end of this month too. Definitely inflation comes out, and CPI comes out at the end of this month, which is probably Friday.
Yep.
Because Friday's the 29th or something. I think it's coming out on 29th. So RBA's meeting Tuesday next week, Melbourne Cup Day. It's their second last meeting of the year. What are you guys thinking? What do you think? What do you think is going to happen? Do you feel there's an interest rate reduction coming?
I don't think so. I think that from my little knowledge of rates, and you guys are far better positioned than I am.
No. Let me say something before everyone says that. None of us know what's going to happen until we see what the CPI number is. Not even the Reserve Bank knows.
I reckon the Reserve Bank need every single indicator to say we have to cut before they will.
Yeah, that's what I feel.
That's what I think.
Except what's good is that the unemployment number kicking up so hard.
Yeah,
but that was a bad outcome for anyone who's lost their job. But it's good from a person who might be hoping there's a rate reduction on Melbourne Cup Day. What are you seeing, Louis?
Well, the RBA is always trying to avoid having egg on their face, and the unemployment number will scare them a bit. It may spook them because, okay, if we're at 4.5 and that keeps climbing, what's the next stop? 5? And that will not look good for them if they haven't cut rates.
And that was not their prediction either, by the way, 4.5. It's outside their...
That's right. Now, that might just be an outlier, and the next number might come back to 4.3 or something like that. They don't know. If the CPI behaves itself when it comes out, and so we're recording, say, a number under 3%, I think the probabilities will increase that they may well cut on Melbourne Cup Day, keeping in mind that I thought that their last statement was pretty hawkish. In other words, they were really trying to tone down the likelihood of imminent rate cuts going forward. But yeah, I think that 4.5 may well have spooked them. So the money markets right now, I think if I recall the probabilities are that there's a 30% chance of a rate cut on Melbourne Cup Day.
That's not high.
That's not too high, no. But it will go up if that CPI number is very tame.
Would you reckon that'd be the same percentage about trying to back the winner in the Melbourne Cup?
Something like that, yeah.
Well, what's interesting, the Melbourne Cup's on at 3:50, right in the middle of the Reserve Bank Governor's speech.
Right.
She does a conference. So they released the numbers at 2:31, and Eastern summertime, which is the same time Melbourne is in Sydney, 2:31. It's released in Sydney, and then she starts a press conference at 2:50 or something.
I remember once upon a time they lifted rates on Melbourne Cup Day back in 2012, and they seriously regretted that because less than a year later they had to cut rates again.
Yeah.
And everyone gave them a lot for lifting rates in Melbourne Cup Day.
One thing's for sure, they won't lift the rates.
They won't lift the rates.
What do you think? Should we work out what 0.25% of our mortgage is and go and have it on the Melbourne Cup?
Well, Koulis and I have both concluded that there won't be a rate reduction.
Okay. Interesting.
Because she'll just say, well, look, we're happy with everything where it is at the moment. We are, but the language might change from to starting to talk more about how the current interest rate is restrictive and how it needs to be more supportive.
Yep.
And then they will look for they won't do anything in December, but they wait for the February meeting.
Yep.
There's a meeting, and after they get the January numbers.
Yep. And
if the January numbers can confirm what are we saying about the unemployment, if we can get another something above 4.2 or 3 in unemployment, and if we can keep the trim mean inflation number somewhere, around 2.5, the magic number, then we'd probably see one more rate reduction. You know what's interesting about the money markets? The money markets have got it so wrong.
Oh, they have. Yeah, it's not.
Oh my God! Like it's like this one year, and generally speaking, the old view was, the RBA never went against the money market, and the money market, because the money market is preemptive.
Yeah.
And the old RBA process was preemptive.
Yeah. Now
the new RBA's position is whatever the data tells me, that's what I'll do, and I won't do anything until I see the data, which is what happened in the July meeting. She got and by the way, in July meeting she did nothing. 8th of July she didn't put the rates down. The unemployment number kicked up to 4.3, I think it did. And then she still didn't do anything. In the August meeting, she waited until the July numbers came out. August 8th or whatever the date was in August, reduction. So they're no longer preemptive like money markets. And everyone got some people said they didn't get it wrong, but they're lying. They got it wrong. Everybody got it wrong. Everybody got it wrong.
I think the cook's still crowing about some economists predicting 3 multiple interest rate hikes in 2024-25.
Yeah, exactly.
He still talks about that on X.
Yeah.
Well, I mean, anyone who's looking to try and buy a place between now and the end of the year, there's not a lot more new property coming on the market. There's really only probably 3 or 4 weeks less for agents to be launching a property onto the market before the end of the year. So we start thinking about what's going to be happening in 2026.
Should people be looking at, in your experience, do people do well like this? What was up for sale that didn't sell and it's still for sale on the 23rd of December?
Always a good time to buy.
It's a good time to buy?
Yeah, right. The few days before Christmas is generally a good time to buy, or December's generally in itself a good time to buy. But it does depend on how the market's tracking.
Because I guess it's part of the reason for that, like if someone's still got the property on the market, they haven't been able to sell for the last couple of months.
Yeah.
They really do want to sell.
Yeah. But like what Lou was just saying before, there's a reason it hasn't sold. Yeah. And generally it's a negative.
Maybe they're just asking too much.
Negative, well, possibly, yeah.
It's usually the number one reason, isn't it?
Yeah.
They're asking too much. And if it's still for sale, that means they're probably willing to accept an offer, or they just live in hope.
You'd like to hope so, but there are a lot of owners that don't need to sell, and in rising markets, they will eventually get their price. Depends on how long they're going to hold it for.
Thanks, Damien Cooley from Cooley Auctions.
Thanks,
and
Mark.
Louis Christopher from SQM Research. Thanks very much, guys. Great convo. I really enjoyed that.
My pleasure. Thanks.
Cheers.